TYK number 3. MNP Limited has declared and paid annual dividend of 4 per share. It is expected to grow at the rate of 20% for the next 2 years and 10% thereafter. The required rate of return of equity investors is 15%. Compute the current market price at which the equity shares should sell. So we need to find the current market price of the equity shares. They have given us the dividend per share 4 rupees and growth rate for first 2 years. So for the first 2 years, growth rate is 20% and from third year it is 10%. So this is a two-stage model. The required rate of return is cost of equity is 15%. We need to find the current price at which equity shares should sell. So we need to find the present value of the equity shares at the rate of 15%. So we can write the given details. Dividend D0 is equal to 4 rupees. Growth rate is 20% for 2 years. Super growth rate 10% from year 3 onwards. Cost of equity 15%. So first we need to find the dividend for all these 3 years. So for the first year, dividend is, how much is the dividend at the end of D0? 4. So for first year, it is 4 plus 20%. So 4 plus 20%, 4.8. So for the second year is, again 20% will increase. 20% is the growth rate. So we need to add 4.8% plus 20%, 5.76. So for the first 2 years, the rate is 20% and from third year onwards, growth rate is 10%. So for the third year, 5.76 plus 10%, 6.336. So we got the dividend for all these 3 years. Year 1 is 4.8, year 2 is 5.76 and year 3 is 6.336. Now we need to find the terminal value at the end of year 2 because the dividend is growing at a constant rate from year 3. So for year 2 and year 1 and year 2, super growth rate, and from year 3 onwards, constant growth rate of 10%. So we need to find the terminal value at the end of year 2. We use Gordon's growth model to find out the present value of all future dividends after year 2 as a single value at the end of year 2. So we need to find that single value. So we need to find the terminal value at the end of year 2. So B0 value at the end of first year is D1 divided by KE minus G. So for year 2, terminal value is D3 divided by KE minus G. So for terminal value in year 5 is equal to D6 divided by KE minus G, like that. So terminal value in year 2 is D3 divided by KE minus G. D3 we already calculated, 6.336 divided by KE. Cost of equity is 15% minus growth rate is 10%, 0.1. So terminal value in year 2 is 126.72. Now we can calculate the present value of equity shares. So for year 1 and year 2, D1, and in year 2 there will be dividend at the end of second year plus terminal value at the end of second year. So cash flow at the end of first year, cash flow is dividend. Dividend is 4.8. So first year it is 4.8, second year it is 5.76 plus terminal value at the end of year 2, 126.76. Okay, that is 132.48. Then what is the cost of equity? 15%. So we need to discount it at 15%. So for first year is 1 divided by 1 plus 15%. Then for second year is 1 divided by 1 plus 15% whole square. Then present value is cash flows into present value at the rate of 15%. 4.17 and 100.17. Value of share today is 104.35. That is the current market price at which equity shares just declared a dividend of 14 per share. So they have declared a dividend of 14 per share. Mr. B is planning to purchase the share of X Limited, anticipating increase in growth rate from 8% to 9%, which will continue for 3 years. So D0 is 14 and the growth rate is expected from 8% to 9% for 3 years. He also expects the market price of this share to be 360 after 3 years. So what is this value at the end of year 3? That is terminal value in year 3 is 360. So two-stage model usually രണ്ട് growth rate തരും, we will find the value, terminal value. But in this question, constant growth rate എത്രയാണെന്ന് പറഞ്ഞിട്ടില്ല. Only they have mentioned the growth rate for 3 years, which is the super growth rate. Okay, you are required to determine the maximum amount Mr. B should pay for shares if he requires a rate of return of 13% per annum. So current market price at which he should purchase the shares എത്രയാണെന്ന് calculate ചെയ്യണം. Cost of equity given is 13% per annum. So we can write the given details. D0 is 14, growth rate is 9%, terminal value in year 3 is 360, cost of equity is 13. So we can draw the table. Year 1, 2, 3, first year, second year and third year. Growth rate is 9%. So first year നമ്മൾക്ക് എന്താ കിട്ടുക? D1. So D1 is D0 plus G. D0 is 14 plus 9%. 14 plus 9%, 15.26. And in year 2 we get dividend of first year plus growth rate. So D1 plus 9%. 15.26 plus 9% is 16.63. And in year 3 we get dividend plus value at the end of year 3. So D3 is D2 plus 9%. D2 is 16.63 plus 9% plus 360, 378.13. Now we can find the current market price at which we need to buy the share. For that we can calculate the present value. So cost of equity is 13%. So first year, second year and third year കണ്ടുപിടിക്കാം. 1 divided by 1 plus 13% for first year. For second year it is 1 divided by 1 plus 13% whole square. Third year whole raised to 3. And for present value, cash flow into present value at 13%. So the current market price at which you should buy the share is 288.57. Second part of the question. The maximum price Mr. B will be willing to pay for share if he is of the opinion that 9% growth can be maintained indefinitely and require 13% rate of return per annum. So indefinitely the growth rate is 19%. So this is not a two-stage dividend model. This is constant growth model. Constant growth model, how do we find the value? So value is V0 is equal to D1 divided by KE minus G. What is D1? D1 is dividend for the first year, 15.26. 15.26 divided by cost of equity is given in the question, 13% minus growth rate 9%. So 13.13 minus 0.9 divide ചെയ്യുമ്പോൾ 381.5 is the constant. 381.5 is the price at which Mr. B should pay for the share if he is of the opinion that 9% growth can be maintained indefinitely. Now we can see the third part of the question. The price of share at the end of 3 years. So at the end of 3 years we need to find the price of share. What is that? Value at the end of the year 3. That is the terminal value at the end of year 3. If 9% growth is achieved and assuming other conditions remaining same as in 2 above. So growth rate 9% ആണ്, cost of equity 13% ആണ്. We need to find the value at the end of year 3. So value at the end of year 3 is equal to dividend of fourth year divided by KE minus G. So what is V0? V0 is equal to D1 divided by KE minus G. So value at the end of year 3 is equal to D4 divided by KE minus G. D4 എന്ന് പറയുന്നത് D3 into 1 plus G. What is D3? D2 plus 9%, 16.63 plus 9%, 18.13 is D3. So 18.13 into 1 plus 9% whole divided by KE is 13%, G is 9%. So 494.04 is the value at the end of year 3.